So hello and welcome to the next edition of Fridays with Fintelekt. My name is Shirish Pathak. I head Fintelekt Advisory Services. And for those of you who don't know what we do, we are focused on research, training, and advisory in anti-money laundering and countering terrorist financing. My guest today is Liat Shetret, who is a senior advisor for crypto policy and regulation at Elliptic and an international strategic advisor for security, financial integrity, and inclusion. For the past 15 years, Liat has led global capacity building and technical assistance programs on AML, CFT, financial inclusion, and countering violent extremism. She has formerly worked at the Egmont Group of FIUs, Citigroup, the Global Center on Cooperative Security, and the US House of Representatives Committee for Homeland Security. Liat, it's a pleasure to have you with us today, and welcome to the show.
Thank you, Shirish, and thank you to Fintelekt for having me. I appreciate everyone tuning in today. Thank you.
Great. So, Liat, jumping straight into the questions, let me pose the first one to you. So, cryptocurrencies and blockchain are generally mentioned in the same breath in conversations, especially though, by those who are not very well initiated in the subject. So, just for the benefit of listeners who may not be too familiar with the terms and the differences, can you briefly outline what each of these terms refers to, and maybe a quick wrap on recent trends around each?
Sure. Sure. Thank you. Yeah. So I think what's really important to think about before we jump into the definitions is kind of what is money and how we perceive money and what that is. Is it tangible? Is it digital? What is money generally? And so when we think of our traditional US or Canadian dollars, the euro, the sterling, the Indian rupee, the Chinese yuan, that's kind of what we would call fiat money. So legal tender that's backed by a central government. It's very clear who issues it. It's very clear who owns it. You've got an ownership structure. None of that is anonymous, right? Including, by the way, electronic payments. So the value corresponds one-to-one to the value of the currency in which you purchase it. Now, cryptocurrencies or crypto assets or virtual assets, all of these are terms that depends on which organizations you read from. You'll find that they're often interchanged with each other, generally mean the same thing. It's a secure digital representation of value or contractual rights. So it's essentially having the rights to a particular virtual asset. And it uses what's called distributed ledger technology, which is a system like a record keeper that essentially records the transaction of assets in multiple places at the same time. And so crypto assets can be stored, traded, or transferred electronically. And what's unique about them is that they're secured using cryptography. And cryptography is essentially a method of protecting information and communications that uses a lot of codes and a lot of really complex kind of information that's intended to avoid anybody just being able to guess your crypto keys. And so essentially, if you think about it, the prefix crypt actually means hidden or vault. So it's a bit of, all of your value is stored in this vault. And so examples of cryptocurrencies would be Bitcoin or alternative coins. You may have heard of altcoins, which is short for alternative coins, such as Ether, XRP, and Litecoin. This whole house of, or entire echo chamber of cryptocurrencies is huge. There's over 2,000, 3,000 of these, and they sort of morph every day, with Bitcoin kind of being the one that was most well known in the market 10 years ago, and also has the highest market cap if you look at it. And very briefly on blockchain, so blockchain is very separate from crypto in a sense, because it's the underlying record keeping technology which stores the data in blocks that are physically chained to each other. By physically, I mean by code, and maintained across several computers that are linked into one network. And so what's really important to remember is that this blockchain technology that underlies the payments essentially assures data integrity and data validity and cannot be changed. And it's this blockchain technology that we're seeing pop up across different industries. You're seeing it in real estate to maybe secure data related to land deeds. You're seeing it appear in different medical record keeping. Any place that we really require secure data and an inability to change data, can make use of blockchain technology. And just one other point that I would make is that within this ecosystem of crypto, you've also got the crypto asset exchanges. Crypto asset exchanges are essentially the business platforms that really offer crypto asset exchange services. So think about it like a local Forex, where you would come in and swap either your cash or your crypto. So you would do not just currency swaps, but also be able to unload from your cash, from your bank account onto crypto. And this is usually the first place that, for example, newbies to Bitcoin would find, a crypto exchange that they perceive to be trustworthy, that is, an institution that they would want to open up an account in, and that's where people would initially hold their crypto. I can talk about this for a very long time, so I'll just stop there. Happy to.
Sure. So I think that's a really good primer on crypto and blockchain. So moving on, everyone's speaking about the pandemic and COVID-19. So is there any shift in trends that you have seen as a result of the pandemic in the way cryptocurrencies are being used to launder money? And is there anything significantly different that is happening? And what are the risks to banks in terms of having to adapt to ensure that they can still raise suspicious transaction alerts on this?
Yeah, I mean, first of all, with regards to the pandemic, I really wish everybody health and safety, and I hope everyone stays well. I think what's been unique about this COVID-19 pandemic is that it's really fast-tracked a lot of processes that we've seen in place. For example, digitization projects that are looking to quickly, kind of rapidly create contactless payment methods. You're seeing an uptick around the world. There's particularly a demand for cryptocurrencies in certain countries as a result of COVID-19. You're seeing a lot more Bitcoin kind of peer-to-peer trading in places like Argentina or Chile, Venezuela, and Morocco. So a lot of places that really are looking to stabilize economic activity where there's a little bit of upheaval. So I would say that the effects of the virus have not entirely been kind of negative, right? There's been a lot of opportunities that are being seen as a result of this. For example, an uptick in hiring and crypto exchanges that are seeing this big flurry of activity. But when it comes specifically to the money laundering risks, we are seeing a misuse of crypto, as in many other industries, that relate to, for example, ransomware or scams that are associated with different payments. And one unique issue that's come up, I think it started well before the pandemic, but has increased right now, is the idea of purchasing Know Your Customer, KYC kits, identity kits on the dark market that you can then sort of use to establish maybe a illicit version of a digital identity. And I think banks are really now at this crossroads about needing to grapple with how do they do KYC? How do they conduct due diligence on customers when so much of it is now shifted online? It's raising a lot of issues around authentication of documents, vetting of identities. The Financial Action Task Force has come out with guidance on this. So I think it's really important for banks to consider what are they doing with regards to digitization efforts of their KYC procedures, particularly around their high-risk customers. That's really important. Regulators around the world have been very clear in communications. They're issuing, if you have a look at different jurisdictions in different regions, it's really key to see that regulators are not quiet about the pandemic. They're communicating what the specific trends and typologies are for individual countries and also regions. And then in the same sort of breath, they're also indicating a lot of what their expectations are from reporting entities, including banks. Specifically, when it comes to suspicious activity reports, the US, Canada, Australia, many of the larger kind of regulatory bodies have come out to say that they have full expectation that banks will continue to raise quality, timely SARs. And that poses a challenge for many banks who've been scrambling to shift to a work from home model, assuring security against cyber criminal activity, and assuring that their systems are in place. Regulators are also demonstrating that they're quite reasonable. They do have an option to submit a proactive declaration of non-compliance. And I think when it comes to things like your ability as a financial institution and bank to handle cryptocurrencies, maybe that's not something that was top of your mind before a pandemic, but now when so much activity and flurry has shifted entirely online, this would be a good time to look at what kind of risk exposure comes into your bank. And so, banks have kind of both direct and indirect risks. And I can talk about this a little bit later if you like, but
sure.
Definitely SARs should continue to be filed. And particularly there's an expectation that SARs on virtual assets specifically should be coming up at an increased rate. So banks should really be aware of what they're doing to achieve that.
Right. So, Liat, blockchain has actually been spoken about for a few years now as a methodology to counter money laundering. And are there any specific use cases that you think have been successful globally? And can it be used for a specific risk? So, if you look at trade-based money laundering, for example, is there a case there?
Yeah, so blockchain, as I mentioned earlier, has so many different use cases, and I think what's very exciting is to see the huge experimentation and piloting that's going on globally by innovators and everywhere and anywhere, right? So blockchain knows no global boundaries, and I think it really is an enabler, an economic enabler of sorts that can allow participation in economic activity. So when it comes to trade-based money laundering, I think that's a really good use case to look at because, not only is it one of the primary means that criminal organizations now use to launder illicit proceeds, I think there's an element of really needing to address the activities that criminal enterprises really make use of when it comes to trade-based money laundering, and we're used to kind of thinking about over-invoicing, under-invoicing, multiple invoicing of goods and services, and I think that what we've been seeing is that there's actually an increase in TBML that's quite ironically maybe, or a funny moment, due to the improved compliance, because there's been this ability to better regulate requirements around AML and CFT regulations. And so in fact, we're seeing a shift. It's kind of like that balloon squeeze where all of a sudden, trade-based money laundering is seeing an increase because compliance structures are working so well on other sides. So what I'm seeing by way of trend is that both public and private sectors are experimenting and investigating a wide range of blockchain type tools to help combat trade-based money laundering. So there's projects that really look at the entire supply chain and the visibility and integrity of that supply chain that's happening both at a regulatory agency level and also with market participants who are looking to just assure that their own companies are not misused, shipping companies, cargo companies. There's some banks who are really piloting different stages of digitizing and automating its document review processes. We talked about how blockchain can be used really to assess and find and assure the integrity of procedures, making sure that documents are not fraudulent and using it in trade transactions. So what I would just note about that is that, yes, there's a lot of activity, but it's also very new. And, for the kind of immediate future, financial institutions aren't necessarily rushing into adopting a variety of tools to kind of combat every specific type of typology. And TBML is also, still remains very specific of a niche to address, but is also highly vulnerable by money launderers and really susceptible to exploitations. So I think there's a bit, if I were to draw a higher trend from all that, I would say that there's a bit of a dissonance between the tech industry boom that's running ahead with applying blockchain technologies and biometric and KYC, digital KYCs, and then maybe governments and a few private sector or a few banks that are needing to quickly adapt to all of this change, and maybe their systems aren't quite there. So I think we're a bit off of mainstreaming kind of the tech solutions for things like trade-based money laundering, but we really should be doing more of that, would be my bottom line.
Right. Thanks, Liat. So, Liat, many banks assume that they're immune to crypto risks just because their country doesn't allow it, or their customers do not declare it. So, is this a fair assumption? And do you think that customers are actually able to move funds into and out of cryptocurrencies easily without the bank even knowing about it. And thereby, it causes intermingling of fiat currency and virtual currency. And if so, what should banks be doing to identify such transactions or customers, from the transaction monitoring point of view?
Yeah, that's a packed question. There's a lot of different themes in there. Very important question, though, so I'll try to address a lot of it. The short answer would be, I don't think it's a fair assumption, and I don't think that banks are immune, even if cryptocurrencies, crypto assets are banned in a particular country. And I think we already have some countries that have banned crypto in which we've seen how this is playing out. I don't want to be naming and shaming any country. Any country is open to do its own business as it sees. But some countries that have banned crypto, what we've seen is that the operations will continue, but the headquarters might move to a different country. Or we're seeing regulatory arbitrage where the money is still moving cross-border, but maybe some services are offered in others and not primarily in that, and in that other banned country. And so I think banning something doesn't make a country immune, and it certainly doesn't reduce the risk. I think what banks should really be thinking about is, am I exposed to risk? Where am I exposed to risk, and how do I mitigate it? And assuming that a country's banned it and or that your bank's policy opposes crypto altogether doesn't mean that the risk isn't there for you, because the customer's position doesn't necessarily align with a bank's position. So, for example, I could be banking with a bank that has banned crypto, but I haven't banned crypto, and I'm certainly using my bank account to purchase fiat, or to use fiat to purchase crypto, and vice versa. In fact, the data that we've collected demonstrates that the flow between banks, financial institutions, traditional kind of banks, and crypto is $500 billion a year. So $500 billion are moving between crypto and cash. I would ask any bank, how much of that is moving through your bank, and what are you doing to address that risk? And I would call that indirect risk. It's not risk that the bank actively has, because they're not banking crypto, they're not issuing crypto, but it is still indirect risk to that bank. And the first step would be basically the same compliance tools that we all know and are familiar with. Your risk assessment. Look at the risk assessment for the bank. Are you even assessing crypto risks generally, even if it's banned? Because if you have a customer base, maybe your customers are mining crypto. Maybe your customers are using it as an investment, and you wouldn't know about it. Some ways some banks, what they're doing is using keyword identifiers. So they'll look at their transactions and screen for words like Bitcoin. They'll screen for words crypto. And while that's a good start, it's not necessarily a comprehensive way. As we discussed, there's loads of different crypto assets. So I think banks should really be thinking about, how do I address this indirect risk, starting with the risk assessment, making sure that they're aware of their customer base, having declarations in place, and also actively conducting transaction monitoring for crypto using unique identifiers. Obviously, there are software solutions that can help do that. And obviously, there are other ways that you can address this by updating your policies and procedures, looking at your AML framework and assuring that it's aligned also with global standards around virtual asset service providers and virtual assets generally. This is a whole other topic, but I wouldn't assume at all that a bank is immune just because a country and or an institution has banned it. And I think we have plenty of countries that have tried to, but that hasn't really gotten them very far. One last point that I think is important on this is that sometimes a country has banned it only to allow the central bank thinking time to develop their own central bank digital currencies. And I think it's been interesting to see these cases where some countries would come out with full declarations against crypto. At that same time, they've bought their central bank some time to rejuvenate, reinvigorate its systems, and think about issuing its own central bank digital currency. And then it gets overturned in the country and it's legal again. And then the central bank is issuing statements that they are now coming out with central bank digital currencies. So I think banning is also used as planning, and that's even a rhyme, which I'm very happy about making that up right now. But it's, I mean, I think that bans should be looked at with a grain of salt, in my view.
All right, excellent. So banning to aid planning. So taking off from that, so Liat, you have a lot of experience in communicating with regulators and policymakers around the world. So, taking off from what you just said right now. So what is your opinion, on how the use and, let's say, pervasiveness of crypto will evolve, bearing in mind that, regulators around the world, as you said, seem divided on whether to allow, disallow, or launch their own digital currencies. And are these currencies really going to replace, the investment in crypto by citizens, although it's maybe illegal, or do you see this sort of coexisting?
Yeah, thank you for that. I've spent a lot of years, many years, dealing with regulators and policymakers in international and national jurisdictions. And I think there's a few really important things going on right now by way of trends. I mean, if you were to look at the numbers, 80% of central banks right now are at some phase of experimenting with, developing, thinking about, observing, or maybe have even launched a central bank digital currency. That's a big number, and that's obviously pointing towards where we're going. My opinion is that there's no going back on this. You either innovate or your currency goes out of business. And I think that's been part of the scramble that we've maybe been seeing in the US as a result of some of the digital dollar projects. There's a lot of impetus in the markets. We can't ignore Facebook's Libra, which is, a blockchain ecosystem, and the Libra payments that are going to be game changing if they sort of continue in terms of potential adoption and reach globally. I think that the Financial Action Task Force, which again is the global watchdog and sort of norm setter, standard setter on anti-money laundering, counterterrorism finance, in June 2019 had passed issued a comprehensive guidance for regulators across all jurisdictions in terms of how they should be handling cryptocurrencies and virtual assets. And the deadline for implementation is June 2020. So all countries in the world, whether they like it or not, more or less, should be implementing some form of regulatory oversight around the cryptocurrency issues and around how it is that they're approaching these topics. So they really have been, there's a lot of activity this past year where countries have been forced to think about, what is our stance on this? How are we dealing with crypto? How are we dealing with our own central bank digital currencies? And I think this push of activity is what we've been seeing this year. And so if you were to look at a map of the world maybe a year and a half ago, you would see a few countries here and there lit up in green to say, yes, we've been thinking about regulatory frameworks, but after June 2020, it would be my expectation that many more regulators have been already thinking about this. And so I think when it comes to coexistence, I think every country will do what's good for its own currencies. Obviously, China's been piloting very openly in 4 different provinces its own central bank digital currency, including, by the way, involved in that experiment are major US companies like McDonald's, Subway, and Starbucks. And that is creating an economic sort of competition, because we all know the sort of the Chinese links in other continents, for example in Africa, and you see sort of the digitization crossing the globe big time. So it's a bit of an economic arms race, if you will, and I think if countries don't, and regulators don't throw their hat in the ring, then they might be in a position of losing out on kind of the strong economic position that they could be in.
Right. So Liat, one last point I thought we should touch on, coming to the whole investigation and LEA side. So in your view, do the LEAs, that is the law enforcement agencies, the tax authorities, the judiciary, do you think they have the required understanding of how crimes are committed using cryptocurrencies? And if not, how would you suggest that they prepare to investigate such cases, effectively?
Yeah, Of course, it varies jurisdiction to jurisdiction. You see some that might be much more sophisticated on these topics, and others that are just beginning, and others that don't even want to know. And that's, every jurisdiction is on their own path. The issue is, do we address the trends on the ground or do we not? And so I think in this regard, when it comes to taxation authorities, they sort of have an obligation across the board in terms of their own mandate to assure that tax payments are happening on whichever assets people are using and however they're being used. So I think, or misused, by the way. So I think it's very important for tax authorities to understand typologies and take the measures around fraud, corruption, tax fraud issues, and really understand how those typologies work specific to crypto. And I think that typology reports on crypto is a very helpful tool to just understand how can you misuse a Bitcoin ATM towards this? How can you misuse crypto arbitrage or regulatory arbitrage between countries to achieve kind of a nefarious or criminal activity? And so I think there's a lot of education that needs to be had also with law enforcement and how to investigate them or crypto crimes specifically. That goes back to kind of trainings, the need to train investigators and law enforcement officials on what they're looking for. What are they even seeing? If you don't know what questions to ask, you may be missing things right under your nose. And so I think adding modules that are focusing on crypto typologies globally to the general trainings that we already see happening for law enforcement is something that's really critical. And then investigations, just understanding where to begin a crypto investigation, understanding what dark markets are, understanding the different players in dark markets and how money is moved, understanding how to conduct a forensic crypto investigation and how to glean information from a blockchain to aid your investigation is very, very important. And I don't think that that's something that many investigation units or law enforcement agencies right now are equipped to do, but of course some are, right? So and kudos to those who are.
Right. Liat, thank you so much for joining us today. I think I found it personally enriching, and I think I've learned quite a few new things today. So thanks for being here with us.
Thank you for inviting me, and good luck with everything you're doing.
Thanks. Listeners, join us again next Friday for the next edition of Fridays with Fintelekt. This is Shirish signing out.